2024 is set to be an extremely important year for cryptocurrencies, with many investors predicting the bull market to continue. So today, we'll look at the main reasons why investors should keep an eye on crypto in 2024. Welcome to GV Market Insights. As the first quarter of 2024 is behind us, we already saw groundbreaking news and important regulatory shifts. Is it all for this year? Definitely not. Let's have a look at the main market catalysts ahead of us. The approval of the Bitcoin ETF has been by far the main market driver in the first quarter of the year, after BTC scored a 155% rally last year, driven by the expectations of the ETF approval by the SEC. On January 10th, 11 Bitcoin ETFs were approved by the SEC, which the day after led to several Bitcoin ETFs hit the market with an astonishing debut with a cumulative trading volume above the $4.5 billion mark. Apart from the explosive market debut, the approval of the ETF has been an extremely remarkable event for the whole crypto industry, as it greatly lowered the barrier to entry to Bitcoin ownership, likely opening the door to fresh money to flow in, both from institutional and retail investors. In particular, flows coming from large institutional investors with several trillions of assets under management will potentially give a significant push to the Bitcoin price in 2024 and beyond. One of the bullish catalysts for the Bitcoin price relates to the main global central banks' monetary policy decisions, with the expected rate cuts in 2024 a tailwind for Bitcoin. As the market price is at the moment of writing roughly 65 bps cuts from the Fed in 2024, despite way less than previously implied looking at swap contracts at the beginning of this year, this would anyhow be beneficial for the main risky assets. Despite the hotter inflation prints and the increasing geopolitical risk which pushed commodities higher, central banks are expected to start cutting rates, pushing at the same time investor sentiment. Among these risky assets, both Bitcoin and more in general cryptos will likely benefit, as the cost of money would decrease, leading to more liquidity in the system. The most pivotal event is the Bitcoin halving, which is expected to take place on April 19th. A more in-depth video on the halving impact on the Bitcoin price will be released soon, so stay tuned. But in a few words, the halving takes place roughly every 4 years, and the Bitcoin rewards that miners receive for maintaining and securing the Bitcoin blockchain are cut in half. Why is this important? This reduces the supply of Bitcoin, so the price of Bitcoin has to increase to ensure the profitability of mining over time till the last Bitcoin is mined. One thing needs to be clarified: the halving does not necessarily imply an increase in the price of a Bitcoin, but a decrease in the number of Bitcoins being issued. The price of a Bitcoin will remain driven by its demand-supply balance, so to ensure this increase in price, the demand has to remain the same or increase. No one knows or can predict with certainty what will happen to the Bitcoin price after the halving. But to get an idea, we can have a look at the previous halvings. Each market cycle had found its bottom around 11 to 15 months before each of the previous halvings, reaching the peak between 1 to 2 years after the halving. Historically, the halving has led to a significant bull run, boosted by the increasing scarcity of Bitcoin at each halving. On top of this, another important highlight is the main stablecoin's strong inflows, which confirm that money is finally on its way back to crypto, supporting what we're seeing in terms of price dynamics across a wide range of coins. The 90-day change in stablecoin supplies among the largest 4 USDT, USDC, BUSD, and DAI has turned positive for the first time since the collapse of Terra. One additional element to keep in mind in 2024 is that the Bitcoin price is positively correlated with other risky assets like equities. When comparing Bitcoin with the S&P 500, Bitcoin rallies have coincided with periods in which the S&P has trended higher as well. This common denominator between the two is mostly due to risk on mute across the main risky assets. So the halving, which means additional scarcity of Bitcoin, plus the approval of ETF, along with investor sentiment turning positive on cryptos, can set the ground for a sustained demand for Bitcoin, which can at the end translate into positive price momentum. Two more things have to be taken into account. One more technical, the June quarterly expiry of Bitcoin options and futures, and on the other side, the US presidential election later this year in November. The June options and futures expiry is something traders should keep in mind as it can trigger additional short-term volatility in an asset class already characterized by a high embedded volatility. The expiry can have a significant impact on the market, leading to wider swings in price, and this is particularly risky for investors holding leveraged positions. Elections are always key macro events, largely affecting financial markets, and cryptos are not an exception. The outcome of the election could potentially have major implications for the US and the global economy, the geopolitical landscape, and the regulatory environment for the crypto industry as a whole. Past performance is never indicative of future performance, so let me know what you think in the comments. If you think this video is helpful, please leave a like and hit the subscribe button. Till the next video.